Here's what the article says. This is from HousingWire. It says, why a good jobs report is bad news for the Federal Reserve. What will the Fed do to get unemployment rate to rise to 4.4%? They want it to rise, right? Because that will cool the economy. It will cause people to have fewer dollars. And remember, when you have fewer dollars chasing that same amount of goods and services in the marketplace, prices will decline and inflation will stop, right?
And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Welcome to episode 1906. And your host today is operating on just about 1 hour and 15 minutes of sleep. Yes, I just got back from Las Vegas. I was there for 5 days and took the red eye back. I hate those red eye flights, but until I want to spend 25 grand to fly private on that little flight, I'm just going commercial for $300. Frugality does not leave even after you've achieved some degree of success because, hey, you grew up without money and you appreciate it. You don't want to waste it, right? I'm sure a lot of you feel the same way. But hey, we've got a great show for you today. I'll try and muddle through the intro portion as best I can with such a small amount of sleep and probably a very coarse voice, I guess. I don't know. But yeah, it's going to be a good show today. So let's share the screen here and introduce our guest. It is Wesley Gray, PhD and CEO and co-CIO of Alpha Architect. And he's here to talk to us about some interesting thoughts on the economy and kind of from the hedge fund world perspective. And so we will have him in just a moment and you get some quant insights into what's going on out there. Okay, but before we do that, let's go back to a prediction that yours truly made in February of 2020. Before anybody was talking about this, I made this prediction. Now I'm sure I'm going to get some feedback. Jason, you got to stop bragging about this. No, actually, I don't. I need to remind people that I was saying this before anybody was talking about it, and that was the move to suburbia. As I started seeing what was going on in Wuhan and what was going on in Italy, I thought, people are going to leave the cities. They're going to leave the urban cores. They're going to go to suburbia. This is the rise of suburbia and even the exurbs and rural America to a lesser extent. But look at the way these rent increases have happened. Now, this is from our friends at Apartment List. They compiled this, and we've had them on the show a few times over the years. And on one side of this chart, for those who are listening on audio only, if you want the visuals on this, just go to YouTube and get them there while supplies last. What I mean by that is, of course, censorship. By the way, did you hear that the disgusting tech company PayPal is now censoring people? Yes. PayPal can now withdraw money from your account if they don't like what you say. I am shocked, to say the least, that we would even have to talk about this. It's so absurd. It's so unbelievable. But this is the world we live in. We don't have to call them conspiracy theories anymore because they've all come true. More on this later. All right, let's go to the rent stuff. So core cities, on this chart, it's two sides, right? Rent change after 1 year of pandemic and rent change since beginning of pandemic. So after that 1 year, the adjustment didn't really occur. There were still a lot of crazy lockdowns and restrictions and things like that, and people hadn't sort of figured out what they were going to do. But we did see rents increase, definitely. However, after everything kind of opened up and people said, screw this, we're not giving up our freedom for a bad case of the flu, then people started making moves. And we saw this mass migration of the American population reallocate itself out of cities to suburban areas mostly, the rise of suburbia. And remember, suburbia is largely a uniquely, I don't know, is that the proper way to say that? Largely uniquely, maybe that's like a double positive. It's largely an American phenomenon. because America was the place that really pioneered the suburbs. In the post-World War II baby boom, you remember famous Levittown. All of this was the rise of suburbia, right? And it's unique around the world. Yes, they have suburbs in Europe, they have suburbs in Asia, yada, yada, but not like the US. The US is a uniquely suburban style plan, just the way the country's evolved and developed, okay? But the core cities saw rent increases, no question about it, of almost 17% since the beginning of the P word. But 15 miles away from the core, 24%, of course you see that I'm rounding, 24% rent increases. 15 to 30 miles away from the core, that core city, 27% increases, and 30 miles from the core, over 30% increase in rents. That is truly amazing. Yes, it is. It is truly amazing. And this is the remote work phenomenon. People have been reducing the number of occupants in houses. I predicted that also. I predicted that roommates would become a liability, a contagion concern, and people wouldn't want to have roommates. They were going to move to the suburbs and have either the same or lower rent, work remotely, have a bigger, better house, and a better quality of life than in these urban areas. And that's exactly what happened. And this chart just illustrates that beautifully. It really illustrates it very nicely. And I want to thank everybody who attended over the weekend our Recession-Proof Investing Summit. That was just a great time spending time with all of you. It was a little over 2 hours on Friday evening and then 5 hours on Saturday. I did that from my hotel room in Las Vegas. And by the way, I stayed at the Virgin Hotel, which is, of course, Richard Branson's brand. I've been to Necker Island twice, his private island in the Caribbean and the British Virgin Islands, and got to hang out with Richard Branson. He's a party animal. I mean, I've got pictures of Richard and I in his jacuzzi with a whole bunch of people, and his servants are serving us coffee tequila shots. Yes, that's his drink of choice over there. They come out with whole trays of them, and you got the tequila and the caffeine, so everybody's just having a wild time. But I gotta say, as much as I'm impressed with Richard's accomplishments, I was not too impressed with that Virgin Hotel. It's okay. I'm not a Vegas fan at all, as you know. I mean, I lived there for a year and a half. I tried it. It's the closest place to California with no state income tax. And it's got a good formula, the airport, very easy to get around the world, lots of direct flights from Las Vegas, but I just don't like the town. I do like it for a couple of things. Music is definitely one of them. We went night clubbing one of the nights and just had a blast. These nightclubs are just global scale in Las Vegas. They are incredible. The amount of money they spend on those nightclubs is phenomenal. And the DJs and musicians and acts that they have, obviously, in Las Vegas are incredible. So that part I enjoy. And then Saturday night, we had a big charity event for abused animals, which is a cause, near and dear to my heart, or prevention of abusing animals, cause near and dear to my heart. I love animals. And so we had a great charity event there and, just hung out with a lot of friends and did some cool stuff. So other than, Vegas itself that I don't love, there are some good features of it, right? You gotta sort of parse things up, right? But anyway, I did this from my hotel room and it went great. The Zoom connection was great. And so really appreciate all of you attending. It was a lot of fun. And I think we got a lot answered. We had a lot of guest speakers, in a fairly intimate group. A lot of people were able to get questions answered and things like that. And, I'll get to that in a minute. First, I want to talk about this article. I just saw this morning on my 1 hour and 15 minutes of sleep, and I thought this was really interesting, okay? The article is about how the Federal Reserve, in raising rates so aggressively like they are, is really not happy. I mean, this is ridiculous, right? They are not happy that the employment market, the job market, is staying strong. They want to see it weaken. They want to see unemployment go up, right? You think, why do they want to do that, right? Because we have a centrally planned economy and they are trying to engineer a recession. Well, ideally a soft landing recession, but a recession nonetheless, right? And so here's what the article says. This is from HousingWire. It says, why a good jobs report is bad news for the Federal Reserve. What will the Fed do to get unemployment rate to rise to 4.4%? They want it to rise, right? Because that will cool the economy. It will cause people to have fewer dollars. And remember, when you have fewer dollars chasing that same amount of goods and services in the marketplace, prices will decline and inflation will stop, right? Maybe it won't be deflation, but at least it will be disinflation, meaning that no more inflation is happening. They've stopped inflation with the currently already inflated prices. At least it doesn't go up any higher, right? So the article goes on to say, on Friday, the Bureau of Labor Statistics reported 263,000 new jobs were added in September. While the growth seems like good news for this economy, it runs directly counter to what the Federal Reserve wants to see. And even worse news for the Fed was that the unemployment rate fell to 3.5%. That's bad news for the Fed. They don't want to see the unemployment rate fall. They don't want to see you have a job. They want to see you unemployed. Okay, that low unemployment rate has to be driving the Fed nuts. Americans working and spending money is something they don't want to see, as they have forecasted a recession next year and are looking for unemployment rate to reach 4.4%. So they want to really kick unemployment up much higher than it is now. This is a dark day for the Federal Reserve and its members, as their goal is to put Americans out of work. Hasn't worked yet. Wow, man. I mean, you just can't write fiction this good, can you? Yeah, it's scary. The powers that be want to see us in pain. That's exactly what they want to do. And this is what happens when you have a centrally planned economy. It's the way it is, folks. Now, the better way, the alternative, the good way, is we should just have a free market economy. Let money price itself at a natural interest rate. Let the job market do what it does naturally. Don't engineer it, and let the free market just run. That's the way it should be, but that is not what we have. It's not even close to what we have. We have the complete opposite. And just remember, central planning is the core technique of communist countries. They are all centrally planned economies. We've talked about that many times over the years, but hey, that's what we have. All right. If you'd like some shorter content, some quicker content, if you'd like some little nuggets rather than longer form content like this, maybe you want both. Follow me on Instagram. I was really happy that last week I went over 100,000 subscribers on Instagram. I've got 109,000 followers on Instagram now. And we just had another video that I did. These are just short videos, go viral. And I think that one has now about 1.7 million views and thousands of likes and all that kind of stuff, which, by the way, I looked up one of my competitors. I think this guy is particularly sleazy. I just don't trust him as far as I could throw him. And I looked him up on Instagram and I thought, gosh, I wonder how many followers does my competitor have? Well, this does not seem legit to me at all, folks, because I looked him up and he actually has more followers than I do. But then here's how you know whether the followers are fake or real. You actually look at the content on the page. And, 72 likes, 61 likes, right? Oh, with a couple 100,000 followers, I think you'd have a lot more engagement on your content on your page, your pictures and your videos, right? But the world is full of charlatans, folks. Do not trust them. They're just misrepresenting their whole thing, okay? It's disgusting. but it's a dog-eat-dog world as that great, well, it's not a poem. It's like I don't know what to call it, but Desiderata. Remember, I've shared that with you before, and in it says the world is full of trickery, right? And so you got to be careful, what you trust, who you trust, and you can just see on these social media accounts and podcast reviews, where every review is 5 stars, right? And they're little short reviews. They're fake. They're just totally fake. I mean, there are these mills that you can go buy reviews from in the Philippines and stuff like that where, here for, $70, we'll go put 100 reviews on your podcast or something. I mean, it's just unbelievable. If you look at my reviews, they're legit because, hey, a lot of people don't like me, right? And they give me bad reviews. My favorite one of all time had to be this title. Someone who clearly did not listen or understand very well essentially was accusing me of being far right wing. And he titled the review, Fox News for Real Estate Investors. I love that one. I thought that was like a really creative title. I got to give it to him. That was good. Yeah, I think he gave me like 1 star. See, those are real reviews and these are real followers and this is the real thing, right? Yeah, if you want some shorter form content, follow me on TikTok or Instagram and you got some real little quick nuggets there, quick lessons, kind of core content stuff. So be sure to take advantage of that. All right. The announcement you've all been waiting for. The announcement you've all been anticipating. Here it is. It's like that Carly Simon song, Anticipation is Making Me Wait. Our Scottsdale event. Go to jasonhartman.com. It's right at the top of the front page. You can register now. Registration is open to the public, and we've got a great early bird deal. This is at the end of January again. It's a 2.5-day event in beautiful Scottsdale, Arizona. It is at a gorgeous resort, and that's top secret until you buy your ticket. Then you will be sent the room block link. We've got discount rooms at this gorgeous resort. It's just going to be a fantastic event. We're going to have a lot of fun. We're going to have a lot of learning. We're going to have some great speakers. We're working on some really big name speakers right now for you to be announced, hopefully. And here's the deal. We've got 3 ticket levels. We've got the general admission ticket on early bird is only $397. That is an absolute steal. But the best deal, the ticket where we will actually lose money if you buy it, okay? Take our money, okay? Take our money. We will actually lose money if you buy this one, is the VIP ticket, because it is $997 early bird. But if you're an Empowered Investor Pro member, you get it for half price. It's only $497 for Pro members. And you get 4 meals in the green room with the speakers. Now, obviously, this is a limited supply ticket. I got to talk to the hotel and see how many we can actually accommodate for this. This one will definitely sell out because it's like our loss leader, okay? You get breakfast on Saturday and Sunday and lunch on Saturday and Sunday in the green room with the VIPs, the speakers, and awesome networking. I tell you, I'm invited to speak at a lot of events. The last event I spoke at, I was in the green room hanging out. I met some awesome people. Really, really powerful networking in the green room. Photo opportunities with the speakers, 4 meals included. That's going to be just a fantastic ticket. And then we've got an elite ticket as well that you can buy that includes one-on-one Zoom session with me and a year of access to Empowered Investor Pro and a year access to our property tracker software. So check that out at jasonhartman.com. It's right on the front page there. And without further ado, let's get to our guest today, Wesley Gray, PhD, and take a deep dive into some of these important things that we all need to be thinking about nowadays. So here's Wesley.